All right, welcome back to the channel. Okay, got something a little different for you today. Today, I've got a recording from a webinar that I did with Scott Case of Upside, and he is the CEO of Upside, which is mostly a business travel company, and they also have Upside Financial, which is helping borrowers through PPP forgiveness process. But he and I hosted a webinar for business owners, and we were talking specifically through potentially some minority business owners that maybe hadn't yet gotten PPP loans. So this webinar that I'm about to clip in here is all kind of talking about diversity in the PPP loan process, kind of where some minority business owners were left behind in the process and what they can do to get caught back up. But I have to tell you guys, this was recorded the week before the announcement that the sole proprietor Schedule C loan application calculation was going to change. So you'll hear me talking a lot about how to get a loan and specifically around Schedule C. But I'm giving quote unquote the wrong guidance because things have changed. So this week I've also posted a video explaining the new guidance on how to get a loan if you hadn't yet gotten one. So I'm going to link that in the description below. And then just anytime you hear Schedule C line 31 in this webinar, just be sure to go, oh, no, that's changed. Okay. I'm going to try to put some notes like during the video too, so you guys can, remember that it's not that calculation anymore. We have a new option, a new way to calculate this. I just wanted to give that a little preface, make sure you guys are really aware. Again, the timing of this stuff, when we do these things, and then when guidance changes, we have no control over that. So we try to do the best with what we have, and that's what this webinar was. But the intent behind it is still very clear, and we want to help those underserved businesses get PPP loans because they were the ones that were really left behind in this process, and we want to make sure that they are doing what they need to do in order to achieve full forgiveness. Well, get a loan to begin with and then achieve full forgiveness. Okay, so I'm not going to talk anymore about this. I'm going to go ahead and play the webinar, and I hope you guys enjoy it.
And we're going to kick things off here. So welcome, everybody. I am Scott Case, and I am the co-founder and CEO of Upside. And we're super glad you're all here. And I'll just give a little bit of a background. This is a special session of Founders Focus, which is a program we started almost exactly a year ago, I guess, or 11 months ago, at the start of the pandemic. And the goal was to create a safe place for founders to come together and talk to each other, and for us to be able to bring experts in to pick up topics. At the beginning, it was about just getting through those first few months of the pandemic. And we've expanded. We've done about 50 different sessions where we talk to co-hosts about all kinds of different things. I've done hundreds of one-on-ones with other founders about the ups and downs of their entrepreneurial journeys. And we use these sessions to act as a mechanism to both teach people things and bring expertise to the table. One of the recurring themes that has come up throughout the Founders Focus, kind of the first season, and has come up a few times so far this year, is the inequity across the entrepreneurial ecosystem. And it's no secret that Black and brown founders face unique challenges that others don't. And in particular, sometimes the barriers might be the same, they're just a lot higher. And the pandemic has been no exception. The significantly greater number of businesses run by women and people of color have gone out of business as a result. And today's goal at this Founders Focus session is to talk about one tool to help small business owners kind of make it through the rest of this pandemic. We're going to talk about the Paycheck Protection Program. It was initially created in the spring of 2020 as a tool to do what it says, to protect the paychecks of small businesses. And there was an enormous amount of confusion during that entire program. And a lot of Black and brown business owners bounced off the system. By the way, a lot of all kinds of businesses bounced off that system. And so what we've done today is we've brought together some expertise to kind of work through how everybody can take advantage of this program. And we're targeting in on working with Black and brown business owners because there's still confusion about whether this is a tool that's appropriate for every business. And I think most people will be surprised at how valuable this can be once you understand some of the mechanisms. So I want to start with using the chat feature. If you would please, I've got 2 questions for you. So if you would please post in the chat, one, just introduce yourself. So it's not really a question, but introduce yourself, maybe a little bit about your business. And then the question number 1 is, did you get a PPP loan the first time around? So that would have happened between April 3rd and about, I think, August 10th or so. And it would have been applying through a bank or a lender with the SBA. So did you get a first round PPP loan? And then second, are you already planning to apply for a second PPP loan or part of our first loan during this new program? So just introduce yourself. What's the name of your business or what kind of business you're in? Did you apply for a loan the last time and get one? And then are you planning to apply this time around? The second round of the PPP stimulus has some very important changes that make it much more approachable for women business owners as well as for people of color. And while there's still some nuances to it, it's really important to understand that this has been kind of redesigned to be much more approachable. And then finally, I'll just tell you a little bit about our story. So Upside Business Travel is our core business. And we participated in both the first PPP loan as well as the second one. And we had a huge advantage. Financial expertise on our team. We had excellent relationships with not just one bank, but multiple bank relationships. And it didn't hurt that the CEO of Upside Business Travel is a middle-aged white guy, this guy. And so even with all that, we still experienced all kinds of challenging messiness in it. And it was a complex process from beginning to end. A lot of stuff has gotten easier, but we decided to try to do our own part. And so we created something called Upside Financial. And Upside Financial, it's a service that's aimed at kind of leveling the playing field for PPP. So business owners can both get the relief that they need. And then also we primarily help with the forgiveness process that comes along with it. And we'll talk a little bit more about that. So that kind of gives you a lay of the land about how we got here. And now I'm going to introduce my co-host for today and the actual person who knows everything there is to know about PPP, or at least significantly more than I do. So I'm joined today by Hannah Smolinski. She's the founder of Clara CFO Group, and she's a PPP expert. She joined our team at Upside Financial as a senior advisor. So she's been helping us kind of wade through all these new rules and help both inform our product, but also help us get the word out about these. And Hannah's been working with Upside Financial for the last several months, and she is nothing short of awesome. Just setting the bar high for you, Hannah, but I know you can exceed it. So with that, why don't you introduce yourself, Hannah, before we dive into some core questions?
Sure. Yeah. And thanks for the introduction. I'm really happy to be here. I'm happy to see all the chats. So keep them coming because we're going to be kind of using some of that to inform like maybe, where we go with some of the Q&A and where we go with some of the conversations. So make sure you put that in there. We love it. So like Scott said, I own my own small business, Clara CFO Group. And what I do is I help small business owners basically use their financial information to make better decisions and to grow their businesses. So last year I was helping clients figure out PPP. And what I realized with that was how many people were not going to know about PPP because it was essentially a first come, first serve program, which automatically, like Scott mentioned with Upside, he knew about the program with the organization that, has the financial team. So when I realized that people weren't going to know about it, I started putting my stuff up on YouTube and tried to educate as many people as I could about PPP and kind of became a PPP expert, sort of from talking about it a whole lot this past year. So I'm excited to be here today and just looking forward to the conversation.
Well, again, thank you. You've done a fantastic service for so many people, and it's how we found you because we were looking for partners that could help explain this in a way that was both approachable and accurate and easy to understand. So let's actually dive in. So the first question I have for you is, why is this second round of funding, this second PPP round, beneficial for Black and brown business owners, and what makes it a little different than the first time around?
So I think the biggest thing about this second round is that it gives people another opportunity. So people who potentially didn't know about it the first time around and are now maybe learning about PPP, or now realizing that they're eligible where they didn't think they were eligible, they now have a chance to come and get this money. So the whole thing with PPP is that it's trying to help small business owners who were existing before COVID essentially maintain status quo and help them kind of float along during these challenging times. So use the money mostly for payroll, which can include paying owners. So that was one of the big things that everybody was really confused about. They said, hey, I don't have payroll. This does not apply to me. But that's not the case. I already saw somebody on the chat that said that they're an independent contractor and don't have any employees. So this is still a program that they can potentially use. So maybe they didn't know about it the first time around. Now with the second round, they can still go and apply for this money. So that's one of the really exciting things that is good for those people that maybe just, kind of got left out to dry, or they tried a couple times and it just was like they couldn't get through. And so now we've got more people, more banks available, and more information out there so we can do it, get the money, and do it right.
I want to put a fine point on that piece, which is, I can be a sole proprietor. I'm the only person who works on, in my business, and I, assuming I meet some basic criteria, I can apply for a PPP loan to pay for me, right? To subsidize my work. Do I have to have a bank account? Do I have to have any kind of employees at all, or other expenses? Or if it's just me paying myself, is that sufficient?
Yeah, so you don't have to have a pre-existing banking relationship. Now, some banks might say, we're going to help our people first. And that was really what was happening a lot with the first round of PPP. Banks were serving their own clients first. However, now we've got lots of banks doing this. Many are saying, come on in, we'll take you. You don't have to have an account here. You might open one in the process, but you don't necessarily have to have been a pre-existing customer or client. And then now we have lots of online lenders as well. Like PayPal is one of the biggest online lenders for PPP, which is not something you think of when you think of PayPal, right? So yes, you absolutely can get this money as a sole proprietor and use it to pay yourself.
We're going to come back to some of the documentation that you need in a moment. So what were the big barriers in the first time around that had 90% of women and minority businesses bounce, that didn't get loans? What were some of the big things, and what's changed?
Yeah, I mean, I think some of that was potentially, when all these systems were set up at the very beginning, it was set up really, really quickly. And so we were all just kind of scrambling for money. Everybody was trying to figure out exactly where to go, what to do. And some banks were giving bad information. Like I said, a lot of banks were turning people away if you didn't have an existing relationship. It was almost like they had too much to do already, so they weren't going to take on additional clients. And a lot of times it's minority and women business owners who don't have those pre-existing relationships that we're talking about. So when they went to try to go and talk to different banks, they were rejected. No, we're not helping you. No, we're not helping you. No, we're not helping you. But now we have additional organizations that can take these loans, and there's specific call outs of the total amount of funding that are specifically for women and minority business owned businesses, or women and minority owned businesses, and also for employers that have less than 10 employees. So with both of those things, we've got specific allotments, so it can't be taken by the large businesses that have all the financial help.
So I'm going to ask another question for the chat. For those of you who are participating live, just post how many, if you have employees, how many employees you have, and that'll give us a litmus for where the conversation should go. So I just want to put a fine point. Everything that you heard in the past around PPP, it's worth sort of forgetting it all and starting from scratch and saying, all right, let me go relearn this.
Mm-hmm.
Why should a business owner kind of trust the PPP system that's not going to like screw them up somehow down the line, right? Like I get this loan and now I'm on the hook for it. And talk a little bit about how it's set up, and maybe this forgiveness piece is an important piece. What is that part? And it feels like one of those things that's too good to be true, and there must be a catch. So let's just lay the catch out, and maybe you can explain a little bit about that.
Yeah, I would say that was one of the biggest things that people were concerned about at the very beginning. Wait, free money? No way. This is too good to be true. The government's handing out thousands and thousands of dollars, hundreds of thousands in a lot of cases, up to millions for free money. That's not possible. No way. But that's actually the case. This is actually happening. I've helped clients through the forgiveness process. Upside has been helping people through the forgiveness process. We're seeing their loans being paid off. We know it's actually happening. The big catch with forgiveness is knowing what you can spend your money on. And if you know what you can spend your money on, then you can decide whether or not you want this loan. And then you can say, I know I can spend it on these things. And if you spend it correctly, which they are now giving ample time for us to spend this money correctly, then we can apply for forgiveness. And they've actually made it a lot easier for the majority of people getting these loans to go through the forgiveness application process.
So if I've applied for the loan and I use the money correctly for payroll, et cetera, I should be able to apply for forgiveness and not have to pay any of the loan off.
Correct.
Okay. So if somebody wants to apply, right, what's the best strategy to go through an application process today?
Yeah, I mean, maybe we can talk a little bit first just for sole proprietors, since It sounds like there's some people on the actual like here right now that are sole proprietors and are looking to get this money. Let's give them some really practical, what do you need to know? So the loans are based off of what's called average payroll costs. So they say you can have 2.5 months of your average payroll costs, and you can get that amount as a loan. But what's an average payroll cost? That's the big thing, right? So for a sole proprietor, this is where it gets weird, because you say, hey, I don't have payroll. But if you take your 2019 Schedule C, which is what you file with the IRS, that's your proof of your net income and your net loss. If you take that number and you look at the net profit, which is line 31, if that number is positive, then you can get a PPP loan. So what you do is you take that number, you make it an average monthly amount, divide it by 12, and then you multiply it times 2.5. So you just a little bit of math, take that line 31, divide by 12, multiply times 2.5, that's your loan amount. And for sole proprietors, the great thing for them, if they don't have any employees or anything like that, is they use that exact same documentation to then go and apply for forgiveness. So you can get 100% forgiveness for sole proprietors without really having to do much of anything. It's just kind of finding the bank to begin with, making sure your tax documentation is in order, and then submitting it. So that's one of the kind of like magical pieces of the PPP that I think kind of was missed the first time around by a lot of people. I convinced my hairdresser recently to go and get a PPP loan because she didn't know that she qualified, and people had told her that she doesn't qualify, but then she got some money.
and most hairdressers and other types of they're all independent contractors, even though they might go to a salon, they rent their chair, et cetera. So let me just give a concrete example, and you're going to tell me whether I get it right or not. Okay.
Are we doing math? Do I need my calculator?
We're going to do, I'm going to try to do it in my head, but you'll correct me with your calculator. Okay. So if I made $36,000 in 2019, right? So that means I made $3,000 a month. And so the loan that I would be eligible for would be $7,500.
Correct. Good job.
Ooh. Okay,
Woohoo.
so just as a very specific thing, that's the way to look at it. And we had a question about, is the form from personal business taxes? Is that where you would pick up the number?
Yeah, so probably what Kay is talking about is on the 1040, which is your personal tax return. If you have a small business, you're filing a Schedule C. So this is if you're a sole proprietor, or if you're an LLC but taxed as a sole proprietor, you're going to have a Schedule C. So you're going to go and find that Schedule C, and you're going to find line 31. And then we can talk about for other tax entity types, because that's kind of how they base it off of. So if it's a sole proprietor, you would do it that way. But if it's any other type of entity, you would be going and looking at payroll reports. Partnerships are also treated a little bit differently. That gets into a little more detail than I think we want to go to, but I do have a YouTube video on it. So if you want to go and look at that, if you're a partnership, we've got resources.
Got it. So there's people that are looking for new lenders. I think we've posted something in the chat about a great guide to those banks that are accepting loan applications right now. Mm-hmm. So if people have questions about that, that's the place to go. And we'll talk a little bit more about some resources that we've pulled together. Most of the people are likely looking for loans that are less than $150,000. You know, the typical company, even with 20 employees, when you do the math on that, 2.5 times the payroll. So what's special about that $150,000 mark? It feels like somebody just pulled it out of thin air. Mm-hmm. So what has the application process done that makes companies who are applying for loans less than $150,000 get certain advantages?
Mm-hmm. So there's a couple advantages. So if you're applying for a second round loan, if this is like when you're getting your second round loan, because we didn't even mention that. We didn't even really talk about it, that you can get 2 PPP loans. And so if you already got one, you can get a second one. We did kind of like allude to it, but I want to make sure that's clear. But if you are trying to go and get your loan, you can use less documentation when you go to actually apply for it. But then when you go to apply for forgiveness under 150, you have a simplified forgiveness form, and you don't actually have to provide the documentation for forgiveness to the banks. However, you have to keep it, which is like one of those things. They say, you don't have to give it to us, but make sure you hold on to it for 4 years. So I always just recommend people make sure you have all the documentation, save it in a nice file, make sure you do the calculations correctly, which there's guidance on how to do that. But then the forgiveness aspect, I literally filled it out for a client today, and it took 5 minutes. And it was a very easy process from like filling out the form. But I did make sure we go and pull all the documentation, to make sure that we've got it all covered. Because if you were to get audited, you do need to prove that out, and you don't want to be scrambling for payroll reports 3 or 4 years down the road.
So let's put a fine point on that. It's important to have the documentation and to track it, even if you are not submitting it to your bank. Mm-hmm. And even if you're above 150,000 and you do submit the documentation to your bank, you also have to maintain that, because you're going to need it when you get forgiveness. And then there's still a chance that you could be audited in some future date. So being organized about how much you apply for, in addition to keeping track of the information you use to apply, it's just good practice. Mm-hmm. I want to ask a little bit about, I guess, from a process standpoint, is there anything different if you received a PPP loan in the first round and you're applying for a PPP loan in the second round? Is there anything different that you need to be aware of as a business getting a second loan?
Yeah, when the second round of funding opened up, they did some things to try to limit the funds and funnel the funds towards the most hardest hit businesses. So they even called it the Economic Aid Act, and it's kind of for the hardest hit businesses. It's like in the name of the act. So what they did is they said, really for the second round, if you got a PPP loan the first time, great. But if you want a second round of money, you need to tell us that you've had a revenue decline. And the revenue decline is comparing one quarter of 2019 to one quarter of 2020. And it has to be at least a 25% decline. So if you had 100,000 in any one quarter of 2019 as your revenue, and then you had 74,000 of that same quarter in 2020, you would be eligible for a second round of PPP loan. Even if the rest of your quarters are like great and you had no other problem, you don't have to show an annual loss, but you do have to prove at least one quarter was worse than the year before by that 25% mark.
Okay, and what if you are applying for a loan for the first time? Mm-hmm. So this is the first loan. Is there any differences or things or benefits that you get as a first-time applicant?
Yeah. So even though this is the second round of funding, it just means more money's been put into the coffers for PPP. But if it's your first time getting a PPP loan as a business owner, you do not have to prove a revenue decline. So it's almost like you were applying back in April of last year when the original rules were put out. So that's really good to know, because there's people trying to go get these loans right now and they're worried because they don't have that revenue decline, but they never got a PPP loan to begin with. So then in that case, you're applying as a first draw loan. That's what you do when you go to apply for it. You say, I'm getting a first draw loan rather than a second draw, because that second draw would be where you have to show your loss.
And so showing that loss is something you need to provide documentation to, even for a loan that's under $150,000?
So you will have to provide the documentation. You don't necessarily, if it's under 150,000, you will not have to give it to the bank right away, but they will ask for it at least by the time you go and apply for forgiveness.
Got it. So one of the questions we had was, if you haven't had a loss of more than 25%, could you be denied? It sounds like you could actually get the loan, but then when you go to get forgiveness, you might not get it forgiven. So be careful that you can demonstrate that reduction. Otherwise, you could find yourself owing that money because you didn't use it, quote unquote, use it appropriately based on your application.
Or technically, it should never have been given to you.
Correct.
Like, that's kind of the bigger thing. It's like, if you didn't actually have a revenue decline of 25%, and remember, second draw loan, we're talking about here only, then it's like you really shouldn't have gotten it. So that's why I don't know why they decided to make this little rule, because you have to do that calculation to determine whether or not you're eligible for that second draw line. I think they might have just done that to give people more time to pull together their financial information.
Sure.
Because I think there's a lot of people that know, like, oh, I might have had 40 appointments a month normally, and now I only have 10 a month, and that might be, you might feel and know as a business owner that you do have a loss. You just might not have all your financial information pulled together just yet.
That's right. So we have a question about if your company is made up entirely of independent contractors. So maybe you pay yourself something, but then you've hired a software developer and a designer, and you're paying them as independent contractors. Do you, as a business owner, do you apply for them, or do you encourage them to apply for their own PPP loan so that they can cover their costs? How does that dynamic work?
Yeah, so you would leave them out of your payroll calculation. You don't include independent contractors because they can go out and get their own PPP loan. But you could still include your own owner's compensation if you're applying for yourself. So that, like, even if you might have a profit that you showed from your business on your Schedule C, even after paying all your independent contractors, and then you can use that number to determine your loan.
So I want to ask a question about the quarterly number. Mm-hmm. Typically when you file your taxes, it's an annual basis. So a quarter is defined as usually for most sole proprietorships, a calendar quarter, right? Most of them don't have a fiscal. So that would mean that you would need to look back at your receipts for January, February, March, April, May, June, July, August, September, October, November, December. And one of those 3-month periods you need to show had a 25% or more loss relative to the same months in 2019. Did I get that right?
Yeah, that's yes. And it is on a calendar quarter. We can't adjust it and say, can I do February, March, and April? It has to be like a true calendar quarter.
Right.
Yeah.
Okay. That I can see why that can be confusing.
So I guess we can mention if you have a loss for the whole year, if you have 2019 and 2020, if 2020 was more than a 25% decline, you can use that number too. And that's okay. Use the whole annual. Yeah. Cause that is easier for some people who, only keep, annual reports. That's great. So hopefully that answers the question that we got. If you have questions and you're live, please do post them into the chat, and we'll pick them up. I do have some follow-up questions just driven by my own curiosity about these things. So if you think about the documentation piece, if you are focused on loans under $150,000, it sounds like the basic thing that you need is go back to your taxes from 2019. If you're an independent contractor, pull your Schedule C, look at line 31, do the math. That's how much you can borrow, and then make sure that you've either got an annual loss or a quarterly loss below 25, where you've lost more than 25%. Is that it? Like if you meet that test, you're good? Yes. Yeah, because that would have assumed that you were in business before COVID. That's one thing that has tripped people up. You have to be in business, but if you're comparing 2019 to 2020, that means that you were in business, right? So you did that. You did your due diligence on deciding, seeing your net profit, and then you made sure you were eligible because you had that revenue decline. You're good to go. You do have to have less than 300 employees, but I think we're talking, most people on this call are less than 300. That's right. Okay. So let's talk about deadlines. When do I need to apply? Yeah. So this money is still first come, first serve. So we have, I think, close to 150 billion, I think, still left. I'm not exactly sure the number because they periodically report on this. But there is still money, and the program is open through March 31st. The first time we got money, it went really fast. And so they added more money to it. And then when the program closed, there was still money left in the pot. So we don't want that to happen this time. We actually want the people who need the loans to get the loans, so that they can get them forgiven. So March 31st of 2021 is, you would have to apply before then. Got it. Okay. And then let's say it's Thursday. I go to my bank, I apply for the loan, and let's assume I've got all my ducks in a row. It's under $150,000. What typically happens next, right? I go on the online portal for the loan. I fill out everything I'm supposed to fill out. What's the basic sequence of events? And then when does the money hit my bank account? Yeah, I've seen this happen as quick as 7 days. And then I've seen it drag out a little bit further. So what happens is, once you fill out, and you're going to go directly to a bank or a lender or an online lender or a community development, a financial institution, and you're going to apply for the money. And then when they get it, they're going to review it. And hopefully you've given them the right information, because they should be asking you for the right information, and they'll review it. They might have some follow-up questions. They might need some additional documentation. So make sure you kind of are watching out for those emails or the communication from the bank. They will review it. And once they approve it, they'll kind of stamp it for approval and send it to the SBA. And then the SBA has time to review it. And then what they do is they give the money to the bank. Or no, then they give the approval to the bank. The bank issues you the money, and it just shows up into your account. You will have, they'll give you usually like some type of e-signature of the promissory note. That's the paperwork to accept the loan. Once you sign that promissory note, it's like a day or two. It's usually not very long from signing the promissory note to actually getting the money into your account. So depending on what your backlog is of your bank, this could be, as little as a week, and then as much as probably 3 weeks.
Okay. And you talked a lot about online and getting emails. Are there banks that you can go to physically if they have an open branch and fill out the application like on paper, or is it all online?
Most banks I've seen are sending people to an online portal. People have been asking if they can fill out their application and just send it directly to the SBA and go around the banks, but that's not how the program's working. We do have to go through the banks. You can talk to your bank and walk in, but most people are being pushed to online.
Got it. And do I have to tell the bank ahead of time that I'm applying? So let's say I have a bank account there, and do I have to give somebody a heads up, hey, I'm about to apply for this loan, or can I just go straight through the portal at the bank and fill it out?
I've seen this happen like every day. Every bank is a little bit different. So they have like different processes internally. I've seen some that say, hey, let me know and I'll send you a link to then apply. It's not just like open to anybody. So if you don't see it on your bank's website and you have a relationship with your bank, go ahead and email them, call them, do whatever you need to do to go and say, how do I get my PPP loan? I don't think you have to give them necessarily a heads up, but it might just be good to say, well, where do I need to go?
Got it. Okay. And we have another question here. If you're going for a second draw, PPP, so you got money the first time around, you're getting a second draw. Is there could you get the same amount? Could you get more in the second draw? Do you have to get less? Is there any relationship to the amount of money from this first one to the second one?
So I'm seeing this like all over the place of people getting different amounts, even if somebody has used technically the same time period to apply. With a second draw, you can use 2019 or 2020 to apply, whichever one is better for you. So that's kind of nice because you might have had higher payroll costs in 2020 than you did in 2019, and then you can use that more advantageous number. There's no kind of stopping you from, hey, you already got 20,000, now you can only get 10,000. There's nothing like that. So it's, even if you use 2019 Schedule C to apply, and then you use 2019 Schedule C to apply again for the second round, that's still okay. And so in a perfect world, we would have applied with the right numbers the first time around and we'd get the exact same number the second time around. However, most people didn't have enough information to get the right amount the first time. And so now I'm seeing people kind of get the right costs and understand everything they can include the second time. So I'm actually seeing loan numbers being higher in this second round.
So I need to calculate it really independently. I should look at what I need in the second round, apply by the rules and apply. I know that this is on the other end of the spectrum, but just in terms of the rules, they did have a lower total cap this time. So if you're a larger business, or you had a lot more employees, you can't apply for more than $2 million. Is that correct?
Yeah, that's correct. So that's kind of helping keep that, the smaller business owner, the one that probably needs more help, trying to focus those dollars a little bit more. Yeah.
So is there any restrictions on the timeline as a business owner to use the funds? So we know that they're supposed to be used primarily for payroll. So, and I'm going to come back to what else might they be used for, but if they're primarily used for payroll, do I have to use them all within, if I get the money in my bank, do I have to use them all in 2.5 months? Or do I have a longer period of time to use the funds that I got, even if I'm using them for payroll?
Yeah, we actually have the option now. The SBA added this option that they said you can use the funds anywhere between 8 weeks and 24 weeks. So you start using the money right away. You get the money in your account and you start using it right away. And you like the time you're using your money is called your quote unquote covered period. So your covered period can either be as short as 8 weeks. So after 8 weeks, you can apply for forgiveness if you've spent all the money. But then maximum, it can be 24 weeks, which is almost 6 months. So if we only got 2.5 months of payroll costs, but we have 24 weeks to use it, the likelihood that most people are going to use 100% of this money on payroll costs is really high. So that's totally fine. In the eyes of the SBA, they're happy for you to use all of it on payroll.
And what does SBA stand for?
Small Business Administration. And they are the ones that are reviewing they're like the ones that are approving the loans at the very end. And they're the ones that have the final say on the forgiveness, because once they review the forgiveness application at the very end, they're the ones that fund the bank and wipe your loan clean. So they're the ones you really care about. And they're also the ones issuing the guidance.
But you don't interact with the SBA directly. It's really the bank that's going through it.
Yes.
So you talked a little bit about this, but these are loans until they're not loans.
Right.
So at the point that you take out this loan, you as a business owner are on the hook to use the money properly and apply for forgiveness at the right time, in which case you can get all or part, usually all of it, but or sometimes part of it forgiven. Mm-hmm. But if you don't use it, or you don't use it for the right things, you have to pay it back. What are the terms if for some reason you borrowed the money and maybe you had to shut the company down and now you've got this loan hanging out there for part of it? What happens in that case?
Yeah, so it's still a favorable business loan, even if it were not forgiven. The terms of the loan is 5 years repayment at a 1% interest rate. So, I mean, you can't get a 1% interest rate anywhere, but that is if it were not forgiven, or if a portion of your loan is not forgiven, it converts to that timeline, the 5 years at 1%. And that, like you said, if a business closed, they weren't able to use it, they'd be, on the hook for whatever could not be forgiven. It's important to note, if you're not intending to use this money in the right way, if you want to use it for something else, if you want to buy a Lamborghini, don't do it, because that's not what the money is intended for. And you have to make certifications that you're trying to use this money in the right way when you sign up and get these loans. So we don't want anybody going to prison for using the money incorrectly. We have a good story about that, but we, use the money for the intended purposes. But if something happens and there is that risk, there's always business risk that we don't know what the future holds, right? So that's the opposite side of it. It is good to know what you're signing your name to at the end of the day when you sign that promissory note.
Yeah, I think that point about signing the note, again, if you apply correctly, which is pretty straightforward, and you use the money for payroll, you shouldn't have any problem getting forgiven down the line. There are other things that you can use it for. So I want to ask some questions around, you talked about a hairstylist. If I'm getting paid from my client, $50 for a haircut, and I do 100 of those. And so I think that math adds up to $5,000. And I have to rent the chair, and I have to, maybe I've got a commute that I have to pay for to get there, and these other expenses that are there. Can I use a portion of that loan to pay those expenses in addition to paying myself?
Yeah, so at least 60% of the PPP loans have to be used for payroll and payroll costs. So that's kind of lump all of the payroll related stuff into payroll costs, but you have to reach that 60%. But let's say you did, maybe you didn't need to take the money home as owner compensation, but you did need the money to pay that rent. You can use the money for rent. There are 7 categories that you can use this money for that are considered non-payroll costs, and they can make up to the other 40% of that total. So that ratio can change based on what your business needs, but rent is one of the big ones. Utilities is one of the other ones. Mortgage interest, less people have that, but that's something you can do. Property damage costs from riots that happened, if it's not covered by insurance. Software expenses in the business. A lot of us have software expenses now that can now be included, as well as personal protective equipment for your employees. Like, if, for example, the hairdresser, if you're having to buy masks and you might, buy extra cleaning supplies to make sure that you're cleaning after every person coming in, those types of things can be included and be paid for with a PPP.
Awesome. Well, listen, we're a little after time.
Yeah.
We've answered a lot of great questions. Really appreciate you being here, Hannah. Is there anything else that you would want to share from a parting wisdom from a PPP guru?
Let's see. I mean, I really think this program can be super helpful for people. So it's worth looking into, and don't leave money on the table that could be free for you. And it's worth a little bit of investigation to see if you qualify. It's worth the investigation to research what you should be spending your money on. And then it's worth getting help if you need help along the way, because for the amount of money you're paying to get help, you could be getting tons of free money back. So I think don't try to go at this alone. Definitely don't throw your hands up without doing some due diligence, because it's one of the best investments of time you could do. Like, spend a couple hours learning about it, and you could be getting thousands of dollars of free money into your business. So that's what I'd say. Don't leave money on the table.
I think that's great. And as we talked about, we created Upside Financial as a resource. We do primarily focus on helping with forgiveness, but we also have some lenders that we're working with. So if you need additional help, please check out upsidefinancial.com, and we could be a resource to at least guide you. But as Hannah said, don't leave money on the table that could be driving your business forward. That was awesome. As always, Hannah, thank you. We're going to be doing another webinar with Hannah that is really about the forgiveness side of things, focused both on if you got a loan from the last round and you're trying to figure out forgiveness, as well as how to think about forgiveness if you do a second draw or even a first draw in this new round. How do you think about forgiveness and set yourself up? Because this whole thing is a lot to chew on. So we split it into two. We're going to email today's recording out to everyone who participated and those who registered, and we'll send another invite out for the next round as well. Stay safe, stay awesome, everybody. And please join more conversations. If you found this valuable, we do a Founders Focus session every Tuesday and Thursday. And you can also get one-on-one time with me if you'd like. So please check out foundersfocus.com, and we'll see everybody next time. Again, Hannah, thank you.
Thank you. Bye, everybody. Thanks so much.